welcome to the Let's Talk BS podcast. I'm Bryan.
And I'm Sofia, and we're coming to you live from the
757.
Good morning, Bryan.
Hey, good morning, Sophia. How you doing?
I'm doing pretty good today.
That's good.
Got my coffee in hand.
Uh-oh.
So I'm great.
That's good. That's good. It's Friday. You know, we typically record on Friday, so
Yeah.
excited for the weekend to come. It's
Yes.
been a pretty busy week. I would say this week's went by pretty fast, though, I would say, in my opinion,
Yeah,
How about you? You think it went by pretty quickly?
Yeah.
Yeah.
It did feel like it went by really fast.
Yeah. It seemed like they, I was talking to somebody, man. I was saying, like, last year, it went by so fast to me. Like, 2022, I don't know about you, but to me, it seemed like it flew by. So we're already getting, a pretty quick start on this year. So what about you? You think it went by pretty quickly or not?
Yeah. Last year did feel like it was like it zoomed right through.
Yeah, no, I agree with you.
It was some long days, but trust me. Yeah.
No, I agree with you on that one. So what you got going on? How's everything been? How was your week?
So, yesterday I attended a short-term rental seminar, which was actually really informational. I learned a lot.
Okay.
I'm actually going to be doing a home buying seminar on short-term rentals with a real estate agent, and that's like her niche. So It just gave me the opportunity to learn a little bit more. They had a panel from the zoning department, and they came from Norfolk and Virginia Beach.
Okay.
And so we're looking to potentially invite those folks out to talk at our seminar. But their seminar was more so driven towards real estate agents.
Okay.
Me and the agent that I am working with, we're going to be more focused on investors.
Okay.
So, yeah,
That's good.
it'll be nice to have those people in the building, and they can
they can have direct access questions to
those
them.
questions and things
cool.
like that. So that was really cool. Last weekend I did go out of town, and then I came back early Sunday morning, and I was so tired.
Where'd you go? Did you?
We went up to Alet, Virginia.
Oh, you mentioned that before. Okay.
Yeah.
That's
where my
there?
cousin.
Okay.
My cousin lives there. Yeah.
Okay.
So we went up to Alet, Virginia, and it was nice. My cousin built a new construction property out there, so we went up there to visit, and it was just coming off of like my daughter's birthday, so we went up there, and then I have some friends who lives in, I believe it's Petersburg.
Yeah.
And so they actually ended up coming there too. So we all hung out, just played games and talked mess, and you know how that goes. Listen to music, all that.
Okay.
So then early Sunday morning, we woke up, came back down, and then Maya had a game that day. And so, I've been on this health kick, right?
Yeah.
So we woke up really early at 6 o'clock in the morning. Mm-hmm. And then I was home by 9:30, 10-ish. So
how far is that?
It's about an hour and 40-minute drive.
Okay. That's when you said it's like too far from Richmond, right? You know
no,
what you said?
It's not.
Okay.
Yeah,
I remember
not
saying
too
that.
far from Richmond. So, we get home. And Sundays are usually the days that I wash my son's clothes because he has daycare. So at daycare, they have to have fresh linens for their nap time.
Yeah.
So I throw all that stuff in there. So I didn't really get a chance to eat, right?
Okay.
So I go to the field house, and they have like this concession, but it's like a concession stand. Like, it's not like your childish concession stand. So I get there, and I saw this guy walk past me, and he had some chili cheese fries with bacon on them. And at that point, I was hungry. I was tired. I said, you know what? Forget this. I am eating those chili cheese fries and put extra bacon on it.
You said put extra bacon on it, man.
Yes. So we ended up, I ended up eating the fries. I was sitting there eating my fries with a Gatorade, looking at the game like I was watching a show on my phone and everything. She was playing. I really wasn't focused on the game that day.
Mm-hmm.
That day, because she played 2 games. So the first game, I wasn't focused at all. I was focused on those fries and whatever show I was watching on my phone. And then the second game, I was engaged. So it was
question,
funny.
You said it was chili cheese fries with bacon, right?
Yes.
So question.
Mm-hmm.
With the chili cheese fries, do you eat it with a fork, or do you actually get your fingers dirty and use your fingers to eat it?
So if I was at home, I would probably, because Okay, let's back up.
Oh, okay.
I am half East African, so most, if not 100% of our dishes you eat with your hands. So if I was at home and I had the opportunity to wash my hands and stuff and eat from my hand with my hands, I would.
Okay.
But because I was out in public and stuff like that, you know, when you eating cheese, like you tend to like lick the cheese off and all that extra stuff, right? So I used a fork.
That's funny how you gave me the whole backstory of just the answer of I use a fork. I used a fork.
Yep. I used a fork that day.
That's funny. That's funny. Nah, you got to eat.
But it was so
I feel
good.
you though. I like as far as the cleanliness of it, man. I see different people, like you said, will eat, use fork, whatever. I like to use my fingers and go at it. You know what I mean? You know, and I lick my fingers all that when I eat food. So
Exactly.
That is true when you think about it. It is kind of not the most.
And then I got nails, like
True.
when I wash
That's
my
true.
hands, I
That's
got to
true.
wash underneath my nails and stuff like that. So it's like, that's just in public, nah.
I got you.
We were at the field house last night, and one of the parents, they let their son go upstairs to play in the little play area.
Okay.
And they was like, "Are you gonna let your daughter go up there?" I said, "Look, it's enough germs at school." I was like, I don't know when the last time they even cleaned that. I was like, nah, she can stay down here and play with the
That's a
balls
matter of fact, because you said the field house, so that's where I had my son's birthday party.
Before pre-COVID, right?
Yeah.
No,
This was during COVID still.
Oh, okay.
I think, it was. It was like 2 years ago. I think it was his third birthday. Yeah, so it was a year and a half ago. And I remember you came to that.
I did come.
Yeah.
But I feel like when COVID was real, people were really cleaning it, right?
Yeah, that's true.
They probably was in there cleaning that thing a few times a day.
Yeah.
But now that COVID's a little bit more relaxed, I don't think that they're cleaning
And
it
that
like
place,
they should be.
I like the field house a lot too. That place, they have a lot of people to come in and out of that place though. A lot. So it's a lot of germs. I mean, you got a lot. You got basketball, you got football.
Exactly.
You got, like you said,
soccer.
when you said birthday parties, you got soccer. I mean, they got volleyball, like you said, for your daughter. I mean, it's just a whole bunch. They even got like this little church. They have a church service on Sundays as well there. Like, nah, seriously. So people rent a space there for church. I've seen one time. So, so it's a lot of folks going through there. So that makes sense.
So I just said, I don't even think she saw it. I was like, no, you can't even go upstairs. I don't even know if she knows it's there. And then, I have two little ones, so as soon as she goes, the 3-year-old wants to go, and then it becomes, and then I have to go. So no, I just eliminated. I didn't even want her to see it, because once they see it, it's a different.
Yeah, that's all they're gonna want to do. Be looking at it, staring at it, want to go. Yeah.
About 10, 12 times that. Mommy, can I go up there?
Yeah.
Mommy, can I? Can I? Mommy, can I?
Yeah.
And then at that point, that's my new name. So.
Mommy, yeah, there you go.
Mommy, can I? So yeah, we did that, and then let me see, what else did we do? Oh, we had the meeting on, what day was it? Was it Tuesday or Wednesday? I can't remember.
For what?
One for Onyx?
Oh yeah, yeah. That was
their meeting, their team meeting. We did a lunch and learn.
Was it Tuesday?
I don't remember.
No, Wednesday. That was Wednesday, right? I think
Maybe.
that was Wednesday.
Yeah,
that was Wednesday. So we went to Onyx. They have their team meetings. They do have their team meetings on Wednesdays. I think it's the second Wednesday of each month. So that would make sense.
So we went there.
Yeah, so that was cool. That was cool. Yeah, they go ahead. You want to
go ahead?
No, I was gonna say that was cool. I mean, it's top of the year now, so you have a lot of agents that have a lot of goals. They're really hyped. They want to put that work in or whatever. Start the year off on the right foot. So we typically go like Onyx maybe once every couple months, I would say, maybe once every 2 months or so.
When we're invited.
Yeah, there we go. Yeah, when we're invited. But yeah, so we typically go there, do little things here and there with them, educate them on what's going on in the mortgage world, so they're prepared when they're dealing with their buyers. And obviously we have a relationship there with them, and they we work together as far as a lot of their buyers that they have. So it was pretty cool to see the amount of people that was there. I mean, typically they don't have a whole bunch of people that come to the meetings. A lot of folks kind of tap in virtually or whatnot, but I think everyone was kind of feeding off the energy in the room that day. My buddy, who's the broker, he hit me up later that night and told me that he really appreciated us coming by. He said that they actually ended up, like, after we left, staying and talking for like an hour and a half about a lot of stuff that we talked about, and then just about what's going on. And he said it really, like, it sparked a lot of energy into the team there. So he was really appreciative of that. So it was dope. That was really good. Like I said, I felt the vibes. You know how you're talking in front of people and like they not really looking at you. They looking at their phone, or you ask if you have any questions. Nobody asked no questions and nothing like that. So I mean, that day we got a lot of questions. So a lot of people were engaged with what we were talking about. So it was cool. Like I said, it was really dope, man. Onyx is always a pleasure to work with them.
Yeah. And that day we actually introduced a new product that we actually were introduced to. So now Atlantic Bay Mortgage, they actually offer, or we offer as mortgage bankers, a new product where you can actually finance your down payment at 100%, and you're not required to be a first-time home buyer, and you can buy a duplex. So it was definitely a good training. That information that we gave sparked a lot of interest, and then we also went over assumptions, and we've actually talked about assumptions here on the show. And if you don't remember, an assumption is when someone takes over your current mortgage and rate. Yep, that's offered for your VA loan product and your FHA. So you're more of your government type loans. So assumptions, a lot of those have been going on lately, like we mentioned before, just because of the rate environment we're in. Rates are higher than they were just 2 or 3 years ago. So you have a lot of military folks who purchased houses maybe when they got stationed here in this area 2 or 3 years ago, and now they're looking to move, or maybe they're having to get stationed somewhere else. And so what they're selling or what they're putting out there is like, hey, I have this really low rate. If you buy my home and you're military, or you're if it's an FHA loan on the home, then you can assume the loan that I have, which means you're going to assume the rate and the terms of the loan. So that's really enticing to someone when we're in an environment where rates are pretty much double of where they were just 2 years ago, right? So that means that person can buy that person's home, and their payment on interest be considerably less. So that's something that's very advantageous for a buyer that's out there looking for homes in this market right now. So we got a lot of good questions on those assumptions, because a lot of people are starting to utilize that. And then I had something go under contract this week. I also had a meeting yesterday where I signed up for this. It's like a platform that we offer here at Atlantic Bay where you can send video messages called Bomb Bomb. And so I signed up for that because I want to get out there and start making videos. If you don't know, I'm going to let you know, I'm not a video person. I'm not a picture taker. I'm not any of that. So I have to get out of my comfort zone and actually get out there and do that.
So question, because I know you lived in Miami for a while. So and I know you talked about we all experienced that party life, clubbing and all that. So when that was going on, the big thing was people taking
the
pictures
people inside the club that take pictures of you.
So when you running from
I will clean tell them, do not take a picture of me.
For real?
Yes.
Oh wow. Okay.
Yes. Not unless you was gonna pay me for that picture.
Oh wow. You was on that. You was on that that back then. For real?
Because they literally. So the people in the club in Florida, what they do is
move the coffee to the side.
So I don't knock it over.
It's getting real. Okay, guys.
So what they do in Florida is they go and they look and see who they want to take a picture of, so they could put it on their website. So then that advertises to people who lives in Virginia per se, to go to the website for the club and be like, oh shoot, they got this type of girl. I'm not.
That happens everywhere.
Right, but that's what I'm saying. My point is, I ain't nobody's advertising.
You're not no walk-in memorial, no trophy, no statue.
No. So every time they would come up to me, now it's been a couple times where they caught me. I ain't gonna lie, but it's 92% of the time 92%? I was telling them no. Yes. That's when funny. I first got there, I didn't know any better. You know what I mean? They didn't have that where I came from. So at first I was like, okay, but then once I got put on to what was going on, I was like, no, I'm not about to. I thought they were just, I didn't think it was for advertisement, basically, is what I'm trying to say. So it got to the point where I was like, look, you want me on your website, you're going to have to pay me to be on your website. Otherwise, I'm not doing it. So
that's funny. That's why I got a quick little story. When I first met Brooke, actually, I want to say the second or third time that we saw each other, it was at a restaurant. So my buddy Ray, his birthday is near hers in October. And so I met Brooke for the first time in the month of September. And so my buddy Ray he invited me to come out for his birthday in October. He was like, yo, it was like a weekday. It was like around like Tuesday or Wednesday. It was actually the day of his birthday. So he was like, yo, there used to be this place called Spades here in Virginia Beach. I don't even think it's around no more. But it was a Caribbean like restaurant in the daytime, and then at nighttime it parlayed to like a bar club. You know what I'm saying? And so he was like, yo, B, come out, man. You know, we're gonna have some drinks. We're just gonna chill, kick it or whatever. And so I was like, all right. And so I remember I had just met Brooke, who's not my wife, and told her like, yo, I'm about to go see my buddy, you know, for his birthday. I was like, you should come out, you know? And so she was like, all right, you know, because I found out at the time that was her birthday was like, I think maybe a couple of days after that or before that or something, around the same time. Yeah. You should come out, you know, I get you a drink or whatever. So she's like, all right, cool. So she came out, and I remember they called it Party Paparazzi. That was like that was the name of the like photography company around here. And like I was just talking to her, and I was talking to Ray, and then like they told us to turn around and take a picture. And she was like, no, like kind of like push the camera like that. And I was like, why you do that? You know what I'm saying? I was like, what, you got people out, you don't want to be seen beside me or something like that? And so she was like, nah, I just don't like taking pictures in the club. You know, and then she didn't necessarily specify why, but I'm pretty sure it probably was something similar to like what you said. So,
yeah. No, it wouldn't be on nobody's website. Yeah. For advertising a club. Yeah. And then if anything ever happens with that club or bad stuff happens, you're indirectly associated with it. Yeah. You know? Yeah, so.
And I agree with you on that. That is true. That's a good point. Again, I don't know if it's a woman-man thing, but me, I don't even think that far into that. I was just like, oh yeah, nice. I look nice. I feel. You know what I mean? I mentioned that before. You look nice, you feel nice, you know what I mean? So I'm like, okay, I look nice. You know, if I'm with some, hey, let's take a picture. Like, hey, let's capture this memory. Like, and you thinking about this, and now I'm like, yo, I didn't even think that far. Yeah. It's crazy. It's crazy.
Yeah, that wasn't for me.
Yeah.
Yep. So then, also yesterday was my friend Brittany's birthday. So
okay.
Happy birthday, Brittany.
Happy birthday, Brittany.
Yes. So I called her. It was funny because I FaceTimed her. She just got an iPhone like last week, right?
What she had, like Samsung? Android before?
Yeah, Android. I don't know what version of phone.
Yeah.
So she got an iPhone, and so as soon as she got it, she FaceTimed was like, hey. I said, what Brittany doing? What is she doing? FaceTiming me. So I answered, she's like, girl, it switched over.
She got that blue bubble now. That blue bubble. No more green bubble.
So yesterday morning, I FaceTimed her. She not used to that. She was like, girl, I look a mess. I was like, it's okay. Just answer the phone. So I told her happy birthday. So
that's funny. Funny. That's cool, man. That's what's up.
Yeah.
That's what's up. But you didn't mention, you said you got a house under contract. I'm going to let folks know this situation that happened, which was great. Props to Sophia on this one. Is I have a home in Suffolk that I was building. It's been basically a year now. It's been a long process because of some different hurdles that we had to overcome. But the house is complete now. And I had it listed. I normally, when I do my new construction homes, I normally list them when it's about maybe 45 days out from being complete, just because sometimes I allow the buyers to kind of maybe pick a couple of finishes, and then, you know, typically when you get under contract, you close in about 30 to 45 days anyway. So I try to time it up so once we close, then, you know, the house is done, and, you know, there's really no time where the house just sitting there complete, right? Yeah. So put the house on the market back in like October-ish time frame, late October, early November. And I mean, it's been sitting, you know, and nobody had a lot of attention. A lot of people went to look at the house, but nobody put any offers on it. Everybody loves the craftsmanship of the work.
It's just a beautiful house. Yeah, I mean, it's really nice.
Yeah,
I mean,
it's just the surrounding. You got a couple of neighbors that kind of like to be outside a lot, kind of talk, and you know what I mean, and just
if you're not a native, then it may bother you.
Yeah, exactly. You know what I mean? Exactly.
So you have to be a native of the area to understand the area.
Exactly. So So anyway, Sophia recently got a buyer pre-approved from an agent that she's newly working with, and she was like, "Hey, Bryan, like, you know, I think this house might be a good fit for this person." So she told the agent. Then,
well, actually,
I'll let you tell the story.
What happened was the agent. I said, well, you know, what is she looking for? He was like, new construction in Suffolk. I said, oh, really?
Yeah.
I said, I have a friend that has a new construction in Suffolk that's getting ready to be sold. So I sent it over to the agent.
Okay.
And he was like, oh, yeah, I think she would really like this. So she went and looked at the house, fell in love, and it was, you know, for her because she's a native.
Yeah. Oh, she's from Suffolk?
She's from here.
From here, this area. Okay.
Yeah.
Right, cool.
So, she ended up really liking the house, and basically, I don't know if I gave the agent the listing agent's info, but needless to say, I think when I sent the listing, he got the information, and they ended up connecting because I don't get involved in the writing of the contract or anything like that. But once I saw that she was interested in Suffolk and new construction, I just felt like it was a good fit.
Yeah. So I just wanted to say I'm very appreciative of you.
You're welcome.
Because of that, because that house has been a thorn on my side. I've been really to close that chapter. I never thought it would take this long, but I mean, again, this game of real estate, when you're an investor, you always gotta, and the market changed during that time as well. So it's just, I appreciate you, man, for making that connection. Because like I said, that's been a headache. I've actually had a couple of I would say sleepless nights, but nights where I woke up in the middle of the night like, when is this thing gonna get sold? Like, I'm always constantly thinking about stuff, and I'm pretty sure a lot of men and women out there, have that as well, where you're just like, all this stuff that you got going on your plate. So it's just like sometimes you wake up out of your sleep, or you can't sleep because all your mind continues to think about those things. So I appreciate that. That's one less thing I got to worry about, into this year. So I really appreciate that.
So some other good news came out. The CPI report. I'll let you talk about
that. Yeah.
But I still haven't seen it.
Oh, for real?
No.
Okay.
I was online waiting, like literally at 8:30. I was like, when is it gonna come out? When is it gonna come? And then I got distracted.
Okay.
So then after that, I was like, at this point, Bryan to tell me.
Yeah. So the CPI report came out yesterday, which stands for the Consumer Price Index report, and it came in. Excuse me. Voice on there for a second, but it came in pretty good. I mean, pretty much where people thought it was going to be at. So last month, it came in at 7.1%. And then this month it came in at 6.5%. And so right now, what the Fed has been doing has been to try to slow inflation down and have the consumer price index continue to drop. And so, like I said, each month over the last couple of months, with what they've been doing, it has been dropping. And so what that does is that just gives the consumer out there, when it comes to like mortgage-backed securities and people wanting to purchase homes, it gives the investors kind of some hope. And then therefore what that does is that has interest rates drop. So I mean we've seen that just even over the last couple of weeks, since things have been trending in that direction, rates have dropped. We had a couple of days where they went up a little bit, but overall when you look at it from a macro standpoint, rates have dropped over the last couple of months, and then even yesterday with the news, rates dropped again yesterday. So that's good news. I'm excited, man. I'm excited for this year. Like I said, I think this year is going to be a little tough, but I think it's also going to be very rewarding, when it comes to, putting the work in and, actually just, making it happen, So I'm really excited. But like I said, the CPI report definitely came in favorable. So rates did drop yesterday, and I think they'll continue to drop here over the next couple of days.
Now, we had our town hall this week, too. I forgot about that. This week was busy.
It was, yeah.
Every day was something. So we had our town hall meeting on Tuesday. So, yes, Onyx was Wednesday because it's like one day after the other.
That's
but
true.
so that they gave a lot of good information. They were talking about what is it, divorce mortgages or something like that?
Yeah.
And it was
like there's actually like
a niche of people
Yeah.
who get with and work with attorneys. And these mortgage bankers basically help out attorneys who are the attorney for people who are getting divorced.
Correct. Yeah.
Because once you get a lot of times when you get divorced, you have to split assets. And one of your biggest assets is the home that you live in.
Correct.
And then if you get real savvy, if you got a marriage or a couple who has multiple homes, then you got to figure that out too. So
correct.
For every mortgage that is on a home, eventually that mortgage has to be refied out of whomever's name.
Correct.
So whether it goes to the husband or the wife or however, because usually you split it from there.
Yeah.
But they were talking about that and like that niche, and I thought that was very interesting.
Yeah.
That there's a niche for people who are getting divorced. So that means that divorce rates must be high.
Yeah. I mean, they say I don't know what it is now, but I know it was well over 50%, at one point, at least, in the last couple of years. I remember seeing something about it or whatever. But that is actually, like you said, I didn't even think about that from that standpoint, but that is something that when someone's going through, or when a couple are going through that situation, figuring out the housing moving forward is something that's normally a heavy topic, and so being able to have that relationship with a divorce attorney, and as soon as they are like, hey, this is the person you call that can help you do this, I mean that's a lot of business you can get just from that alone. So they did kind of touch on that, which was pretty interesting, like you said.
Yeah, it was definitely interesting. It was interesting.
Yeah. So like I said, I mean it's this year I'm really excited for it. I mean, even just coming off of last weekend, I got a lot of contracts. Like I want to say 3 or 4 contracts came through from buyers that I've been working with. Because they're able to put offers on homes, get closing cost assistance on some situations, and it's not as many buyers out there buying, not having to pay well above asking price and all that. And that's the thing. Like I was telling a lot of folks, like because of where rates are now, people are discouraged a little bit because their payments are going to be a little bit higher than if they would have purchased a year ago. But you also got to think about it. Yeah, you also got to think about it too, though. Is you're not having to come out of your pocket $20,000, $30,000, $40,000 to buy a home, right? A lot of folks maybe didn't even have that money to be able to, to try to buy a home at that time, right? Not just put your down payment down if there's a down payment requirement, but on top of, what you're purchasing a house with is paying extra money. And that's what that market was for a better part of 2 years. So now where things aren't like that anymore, you're not having to pay above asking price. You're able to even maybe get your home lesser than asking price, so you're already getting some equity day one when you buy the home, and you're also able to negotiate closing costs as well. So it limits the amount of money that you have to put out when you initially purchase a home. Now, obviously, the rate on it's going to be a little bit higher than it just was, but like I said, if you look at the dollars and cents, I mean, it kind of is what's what when you really think about the grand scheme of things. So, like I said, I'm very excited for it. Also excited about my son. Shout out to my boy. Last weekend, we signed him up for basketball this winter. So last weekend we were able to meet his coach, and he got his basketball jersey. So he's very excited about that. His first game is this coming weekend. So I'm very, very excited about that. I want to see how he responds when it comes to it. Yeah, I'll let you know. I got a feeling my man is just gonna be looking there and just kind of just like stuck.
Carter played what was it? It was
this year. Say basketball. He played last year.
He played basketball, not last year because he had to be 3.
Yeah.
Oh yeah.
I'm saying.
Sorry, it's 2023. Forgot about that. But yeah, he did play in 2022, but he was the age. He still was 3.
Okay.
And it was funny watching those kids play. That age group is hilarious.
Yeah. So I'm already, and so what we did was, he's been excited about it, so I bought him some basketball shoes because he didn't have any basketball shoes. A lot of his shoes are just, regular, shoes that he wears to school or whatnot. So I bought him some actual LeBron basketball shoes. And then earlier this week, he was like, Dad, I want to practice. Like, he wants to, play well when this Saturday. So he's like, Dad, let's practice. And every day he's asking me. So it was actually good weather, like 2 days this week. So we went out there one of those days and shot around and played. And he's actually, I know the hoop's going to be lower when they play, and I didn't have a place to go with the lower hoop. He was shooting on a 10-foot hoop, and a couple times he was hitting the rim. Like, he never made it in. I picked him up, and he was able to make the shot, but I was surprised at how strong he was able to get the ball. Now, he was doing the grandma style with it a lot of times. He was doing underhand, when it comes to shooting the ball.
At least he was trying.
Yeah.
Carter was like, absolutely not. This ball is not coming out of my hand and being thrusted forward. He wanted every time for you to pick him up so he could dunk it. That's all he wanted.
That's right.
Now, I can tell you that the rules for the team that you're on, the way they do it is in that age group, you can't steal the ball from each other.
Oh, yeah. I'm familiar.
So,
I used to.
All you do is this.
Yeah, stay in front of them. Yeah. So, and they let them run around, too. They don't, when it comes to the dribble, they try to enforce to let them know the dribble, but I used to be referee director for the recreation, Woodstock Recreation. So I was a referee director. So I used to watch the kids from that age all the way up to high school. So I'm familiar with it. I'm excited about that though. This weekend he's playing his first game, so that should be pretty cool.
That is.
Yeah.
That's really cool.
Yeah.
Now, earlier we were talking about divorces. You got a refi this week. Are you closing on a refi or something like that?
I am.
Was it a result of a divorce?
Nah, it wasn't. So I got one actually closing. She was closing actually right now. It was closing 10:00 this morning. But so this is a buyer who I helped And this is what I love about our business, man, is like, there's so many different facets of a mortgage, right? So I helped this guy buy a house maybe like 6 years ago, right? It was new construction, like 2017, 2018, I can't remember around that time. But helped him buy a house. He's military. He's current active duty military right now. And since then, I helped him refi twice. Because one time when he bought his house, the rates were like around like 4.5, 5. Then and rates had dipped down to the 3s at one point, so I helped him refi then. And then during the pandemic, the rates got down to the 2s. I helped him refinance again. And then so he has I think 2 high school children. And so also I think something happened with his wife's job during the pandemic, so he's like the only person working in the home. And so he's got a whole bunch of debt over the last couple of years, right? So credit cards are, have higher balances than normal. He even took out a personal loan. And so he's been, I ain't gonna say struggling, but just haven't really been able to, pay that debt aggressively, right? So what we did was we did a VA cash out refinance for him, right? So even though his rate now is going to be higher than what it is right now, because right now he's paying like, I think it's 2.5% rate, but now we're, I think, up into like 5 and some change, 5.5, I believe it is around there. He's able to consolidate all that debt because of how much his house has appreciated over the last couple of years. And so he's able to consolidate basically 90% of his debt, and it's going to help him by like $1,400 a month save that amount of money. Wow. And that's not even counting the interest that he's paying. So right, we're paying all these credit cards and stuff off. So that's helping him out now, right? In the meantime, $1,400 now is being freed up where he can save or put it in different places. On top of that, with the credit cards, he was paying a minimum payment each month, so he's actually going to be paying well more than what the principal balance is on those accounts. So he's saving a whole bunch of money. So he was very, very excited about it. And so like you said, and like I could say here, just because rates are higher, there could be
it's going to benefit you.
Yeah, it could be opportunities for you to refinance. A lot of folks, they said, I remember mentioning it before on the previous podcast, that our previous episode, that during this pandemic, the credit card usage has went up. They said over 100%. A lot of folks online shopping, buying stuff for their house just because people were at home, right? And so now we're in a recession, as they say, and so those payments are starting to catch up on folks. A good way to kind of get out of that situation or put yourself in a better situation, maybe to do a home equity line of credit or even a cash out refinance where you can consolidate all that debt and not have those monthly obligations as you currently do. So,
Yep. All right. Well, that was our week.
yeah, a lot going on. Yeah.
So up next, we're going to discuss or talk about exercise your knowledge. So if you are tuning in for the very first time, Exercise Your Knowledge is the segment where we ask a question that is related to mortgage, but we do not reveal the answer until later on in the segment. Yeah. Today's Exercise Your Knowledge question is, and I'm going to use the $300,000 price point because that's usually, that's our average price point here in Hampton Roads, and we always use that price point all the time.
All the time.
So, okay, if you are pre-approved for, let's say, $300,000, but you find a home and that particular property sales price is $275,000, what happens to the remaining $25,000?
That's a good question.
And this has come up here recently.
Oh yeah, lot. Yeah. I had that question actually on my way here this morning. I had somebody call me, a buyer that I'm working with that was looking at houses last night. They're going to looking at some more today, and we kind of talked through that question, that situation. And I've even had a couple other folks earlier this week reach out and have the same question.
Yeah.
So yeah, that's a good question.
So, $300,000 price point. You get under contract for $275,000. What happens to the remaining $25,000?
Yeah.
So we'll definitely reveal that answer later on in the segment.
Yeah.
But okay, so today's topic, we always talk about what happens beforehand. We talk about the credit pool. We talk about what your credit needs to be. We talk about the actual product that you want to choose. We talk about getting you pre-approved and what it looks like when you start your home search. But I don't feel like we've really touched on what happens once you're under contract. So we wanted to kind of give a visual, or not a visual, but give a storyline or a timeline as to what happens once you've secured that property and now you're getting ready to get to the closing table.
Yeah. So, once you obviously get pre-approved by us, you start looking out there for your home, and then you get the home under contract, right? Typically when you get a home under contract, your real estate agent is going to allow some type of, or write in the contract, a due diligence period where you're able to get a home inspection, right?
And we talked about what the home inspection is before.
Correct. So typically it's like, 7 to 10 days from the date that you and the seller both agree to terms. It gives you the opportunity to set up a home inspection with the home inspector, and then go from there, when it comes to the actual contract. So what happens is when you get under contract, you have the home inspection, and also with the loan aspect of it, when you're under contract, that means that, in most cases, we've submitted your initial documentation, like your pay stubs, your W-2s, your bank statements. We've gathered those documents, we submitted to underwriting, and underwriting has approved those documents at that certain price point. So then after that, what happens is once you're under contract, we have to submit everything back into underwriting, and the underwriting is going to review for any, they call it conditional documentation. So after they review it, maybe there's some deposits in your bank statements that just need to be addressed or need to, be sourced. Maybe, when it comes to your employment, if there's been, in the lab, we always look at things in a 2-year, window. So if you change jobs in the last 2 years, we have to have a correct 2-year timeline of where you work. So we'll look at, if you've changed jobs in the last 2 years, we'll reach out to your previous employer and get the time frame of when you worked and how much you made, just so we have a full 2-year window of your employment.
Or if your employment has changed during this home buying process. So let's say you were full-time and then for some reason you decided to go part-time. And if that happens, of course, that can negatively impact you. But we do verify that type of stuff.
Correct. Yeah. So, I mean, it could be considered a lot, I guess, depending upon, how you feel about the home buying process, or if you've been through it before. Really, we're just kind of checking everything that was put on that initial application, right? So we're checking your income, making sure you have the money that you said that you have as far as assets. We're checking your ability to repay, so that's like your employment. So we're going to check with your current employer that you make the certain amount of money that you make, and then sometimes when it comes to different folks' employment, they may get overtime, they may get bonuses, and in certain circumstances, we can actually factor that in as far as your approval amount. But we have to confirm with your employer, like, the likelihood of that continuing, because if we're going to base your mortgage payment, over the next 30 years, we want to make sure that likelihood of those different other incomes that you have are going to continue.
Because the lender, from the lender standpoint, they're trying to verify, are you going to pay this money back? Because if you don't, then they take a loss, right?
Correct.
And nobody likes to take a loss. If I let you borrow money, or if you let me borrow money and I never pay you back, then you're taking the loss, not me.
Correct.
And so that's ultimately what the lender is doing. So now that we have set those conditions up, we're in the process of, verifying, making sure you're still employed, looking at your bank statements, taking a look at the type of deposits that you make. We may even ask about specific deposits. I mean, not may even, but we will.
You will. Yeah, we will.
We will ask about specific deposits, because you can't deposit cash into your account and use it towards a mortgage transaction.
Yeah. And then even with some of the first-time home buyer programs, there are income limitations, right? And so what we have to do is, if there's...
Make sure you don't have any side jobs,
like a lot of people are doing, like, Ubers, like you said, and, those types of stuff, or even, like, maybe you waiter or waitress or a bartender on the side. And so we want to, confirm all employment, all monies that are deposited into your account. We have to account for it when it comes to some of the different programs that are out there. So that's why I know sometimes, buyers get like, man, why I gotta do this? Yeah, why y'all nosy?
I've had somebody tell me, you want my DNA too? Yep.
Give it to
sure
us.
Do.
Yeah, right.
Put it right here.
Right here, right in your hand, right? Yeah, nah.
No, but we are verifying, like, the things that are important. So if you're a person who likes to use Cash App, we're going to ask for that information. If you're a person who, I don't know if you guys are familiar with it, but on, like, let's say you go and buy a pair of sneakers from Foot Locker, right? On there, they give you the opportunity, because now sneakers are what, $200 for most, for average kid size. So if you're an older kid, you're paying $200 to $250 for some shoes, right?
Yeah.
So nowadays, a lot of these companies have gotten smart, and they're like, okay, well, let me give you the opportunity to split that payment up in 4 or 5. And so people are taking advantage of that. And so what happens is we have to look at the bank statement to see how many times you've done that. Because this is ultimately debt that you owe that's not going to show up on your credit report. Correct. So we're taking a look at that.
Yeah. I mean, that is true. We're taking a look at that. I mean, it's
so many different things.
Yeah. Even, I mean, you have, people that get payday loans.
Yep.
Sometimes that has to, we don't, it's not showing up on your credit report, but it's a debt that you owe. It's a private loan that you're getting, so we have to factor it in.
IRS tax debt.
There we
go.
That's another one. That's another one. Yeah, that happens.
So we're looking at everything that you've obligated to pay that may not show up on a credit report, or any income that you did not disclose that might show up on the bank statement. So we're taking a look at everything to make sure that it aligns. So we're trying to paint a picture for the underwriter to make a sound decision on your approval. Correct.
Right. Yeah. So that's like you said, once they're under contract, just to kind of revisit what we said, you get a home inspection, and then also the underwriter then reviews the documentation
along with the contract
to make sure that everything is in line with that initial pre-approval that was provided.
Correct.
And then so also once the underwriter says, okay, hey, everything looks good, there's just a couple of questions or a couple of things that need to be addressed, we'll send that list out to the buyer. And normally it's, maybe, 5 to 10 things. I guess it just depends on, what that person has going on for themselves. But we'll have you get that list so you can work on getting those items to us. Another thing that we always ask for is a credit inquiry letter as well, because if there's anyone who's pulled your credit within the last 6 to 12 months, sometimes, those companies that when you have new credit, they don't report that new trade line on your credit report
right away.
So right away. So let's say if we can see, because we'll be able to see if, let's say it says Wells Fargo pulled your credit a month ago, and let's say you got a loan with them but it's not showing up on your credit report, then we'll need to know what that credit pool was for, and if you establish new credit, we'll have to get that information as well and factor that in.
Or if you were denied, we just want to know.
Or if it was no credit, no new credit obtained, then we would need to know that as well. But we do have to address which are the different credit pools you have, and it's typically within the last 6 to 12 months, because sometimes even something that happened maybe 6 to 8 months ago, it won't show up for whatever reason.
So once the underwriter conditions the file and lets us know the list of things that we need to work towards, then we have a processor. And so it's in a name. She goes in and she processes the file. So she's the person that's going to now start reaching out to you to kind of clear all these items. So she's going down the list like, okay, well, we got the explanation for the credit. We got, the bank statements. We got the explanations for deposits. We got all of this stuff. And so once everything comes together, then we start looking at, homeowners insurance. We start making sure that your title work has came in. And then there's a list. So let me tell you, there's a list of do nots that we like to send out to our buyers. I actually have them here. And this is just kind of like something that you should know once you get under contract. So when you get under contract, this is what we don't want you to do, okay? We do not want you to change jobs. We do not want you to become self-employed if you're a W-2 employer. We don't want you to quit your job. I've actually had that happen before.
I've had that happen before as well.
We do not want you to buy a car. We don't want you to buy a truck. We don't want you to buy a van, a boat, an airplane, or anything on credit, okay? We don't want you to use your credit cards excessively, or we don't want you to not pay your credit cards on time during this process. We do not want you to spend large lump sums of money. So if you're in the process of buying a home and you think you need furniture and it's a sale this weekend, but you haven't closed yet, well, you're going to have to wait until the next sale comes.
I was going to say, and I'll touch on that one too.
Unless you have substantial amount of money that $10,000 for that furniture is not going to, affect your approval. But if $10,000 is all you have, then you need to wait until after.
Yeah, because I've even had situations before, like you said, where folks they get excited, they got the house under contract, we're going through the process.
Now they're shopping.
Now they're shopping for furniture, like you said, and they'll go out there and buy their furniture set, the kitchen stuff, and they'll spend $7,000-8,000, and that's not something normally that they do. Or they'll open the department store, they'll open up a credit with them.
0% interest.
Yeah, 0% interest. They're thinking that they're getting such a great deal. But what happens is we have to factor in whatever that monthly obligation is now. So if we pre-approved you and you use the top of your budget, you may now not be able to buy that house just off of that. So this is something that's very, very important. Hope everyone's out there listening about this, because I know you get excited, and I know that you want to kind of like get a jump start, because I'm like that. When I have something lined up, I try to make sure I have everything lined up so everything kind of runs seamlessly. But when it comes to buying a home, when we had that initial pre-approval with you, whatever you have going on credit-wise, we're basing off of that. So if anything changes, then that could have an impact on that initial pre-approval. It's as simple as that. I know you don't think like that, but it is like that. So, yeah.
We also don't want you to close out any accounts or debt or liabilities, because that can change your credit score. So if we get into a situation where this particular example applies is, let's say we pull credit. You're at you're now 95 days in, and you finally find your house, right? And we have already pulled credit for you 95 days ago. Well, now it's going to take you an additional 30 days to actually close on that house, right? If the credit report only lasts 120 days, that means that you probably won't close before that 120-day mark. So when that happens, we would have to re-pull credit. So if you closed out an account on your credit report, that could potentially change your credit scores.
Yeah.
So if it changes your credit scores, it could potentially change your approval.
Yeah.
And so that's why we say don't close out any accounts, because we don't want you to get into a situation where new credit is required because you didn't find a home within 120 days, and then now your credit scores have changed. I've actually had that happen before, and it wasn't a good situation, but
I can imagine.
Luckily I was able to get that loan closed within 15 days before the credit report expired. But sometimes it was just like one of those things where it aligned, but had there been any issues with home inspection or anything with appraisal, I mean, we very well could have not closed on time. So
Correct.
Rule of thumb, just don't close out any debts.
Yes, please don't.
On this list, we have do not buy any furniture on credit. We actually touch on that even separate from the previous statement of do not use or charge your cars excessively, because some people don't think of buying furniture as using credit. So definitely don't want to do that. You don't want to originate any new inquiries. So if you're in the process, or even like if you know you're getting ready to buy and it's 2, 3, 4, 5, 6 months before you're ready to buy, stop applying for loans.
Yeah.
Stop applying for new credit, because that's just more documentation that you have to basically complete.
Correct.
You have to give explanations for all of that. Do not make any large non-payroll deposits or transfer money into your bank account without checking with your loan officer first. That's
a big one. Let me jump in on that one. Man, the transfers of money, boy. Folks be robbing Peter to pay Paul and putting money here, putting here, and then having these optical illusions with their bank statements and stuff, and it's tough, and we have to question all of that. And I know it can get uncomfortable when we're sitting here asking you these questions about your finances and what is this and what is that and what is this. So, like Sophia said, I mean, try to keep things, in one account or simple, like, especially if you're getting ready to buy a home, try to condense things down to, okay, hey, this is the account I'm going to use, or this is the account I'm going to have my money in. And, because we typically going to have to get, on some loan types, 2 months worth of bank statements. So, I mean, we're going to go back at least 60 days from the date that, you're actually applying or getting under contract. So, if you have a history of doing some stuff, it's going to be questions, right? So the best thing is to kind of, like Sophia said, prepare yourself. If you're going to buy a house, right? Most folks who are going to buy a house, they know at least 60 days out if they're going to buy a house or not, right?
So you don't just wake up and be like, you know what, I'm going to buy a house.
Nah, that normally is not how it works, usually, right? Yeah. So you got to prepare yourself, just like anything. Just like when you're trying to get a new job, you prepare yourself, right?
Yep.
You know, when you dating and you're trying to talk to that guy or that girl, you prepare yourself, right? So it's the same thing. When you're buying a home, just prepare yourself. Put yourself in a situation. And if you need to talk to us so we can give you the information on how you need to prepare yourself, then that's what we're here for, you know? But, you know, that would help us a lot and also help you a lot as far as the process goes, because sometimes I know a lot of folks feel like these things are very tedious. But what I tell folks is like, hey man, we're loaning you hundreds and hundreds and hundreds of thousands of dollars in most cases. So if you were loaning someone that amount of money, you would want to do all these checks as well with that person and make sure that this person is legitimately going to be able to pay you back over time, because we're looking at a 30-year loan, right, in most cases. So, you know, we want to make sure that all of your, you know, all the T's are crossed and I's are dotted when it comes to, you know, your documentation, and that you do work and that you have this money is legitimate and all that, right? So, you know, it will make the process and the experience of buying a home a lot easier if you're best prepared or well prepared for that situation, because if you're not, you kind of just have things everywhere, because, you know, the thing is, people don't really look at it from the standpoint you're just living, right, until you buy a home. So you're doing whatever you got to do to make sure things, you know, happen the way they happen, right? Everybody has their own way about going about doing things. But, you know, when it comes to buying a house, there's a way that we have to look at stuff. So if you're doing things and it doesn't really fit into that way of what we look at, it's going to feel real rigid and feel really uncomfortable during the process. So, you know, we don't want that experience for you to be a negative one, right? It should be a joyous one. It should be something that you should obviously hold on to, remember, and be a pleasant experience. So, you know, with being prepared for that purchase, it makes all of that, you know, feel and it, you know, that experience be a lot better.
Yep. Now, we also don't want you to change bank accounts.
Yeah, that's another one. I've seen that too. Yeah.
I've actually had that happen in a transaction where they in this particular situation, they didn't really have a choice. They had fraud in their account, so they had to close it down, start a new one. But if it's something like that, of course, you don't have a choice. That's understandable. We're going to understand that. But if you're just closing out the bank account because you don't like something that someone said to you when you went in the bank, just hold off until you close. And then once you close, you can do whatever you want. But it's just less paperwork. Because the thing about it is, for us, right, it's not, all we're doing is asking for it. Correct. But it's up to you to actually get the documentation to us and correctly.
Correct.
So if, you know, we ask you for a bank statement and you're not providing a bank statement, you're going back, you're getting transaction history, you're getting all these different things that isn't a bank statement, you're the one that has to keep double backing and doing, you know, the due diligence to get what we need. So if it's easier for you to keep your items in line, keep one bank account, try to, you know, well, not one, but, you know, keep it consolidated on how you use your funds, it's just easier for you because you only have one place to go. You don't have much to do. It's easy to access. And then you don't have to go through the headache of having to explain, well, where did this $500 go? It went to that account, this other account, and then it got transferred to Cash App. But then, you know, I had to pay Bill to transfer to Bob and all this other stuff. You have to explain all that. So just make it easier on yourself and try to keep things simple during the home buying process.
And another thing that I'll mention, a couple of things here, is, you know, we've been kind of harping on bank statements, right? That's the one that I feel like we typically have a lot of, you know, issues or just a lot of things to overcome, right? Anytime you provide, you know, a bank statement or any document that says one of anything, we need the full document, right?
Oh, yes.
Because a lot of times folks just say, hey, you just want to see how much I got in the bank account, so they'll just send us the first page. Or, you know, if this is a document that, you know, all the information that we really need is on that first page, they'll just send us the first page and not the rest of the document, right? Yeah. We actually need all of the pages, right? So
including the
blank page. Even if that joint's blank at the end, it's 1 of 5, and it just has information on the 4th page, and the 5th page is blank, we need that fifth page as well, you know what I mean? Because we can't assume anything, right? I know you just quick and like, hey, well, this is all you need. Like, no, you can't. I understand how you feel, but when it comes to the documentation, if it says one of anything, because there could be information on there that needs to be taken into consideration on the latter pages. Even though maybe that first page summarizes everything we need, there could be something on the back or, you know, on another page that we really need the information for. And also another thing is you can't put any marks or black anything out on any of the documents. So if there's a social security number on there, or an employee ID, or I don't know, an address that you don't want nobody to know. Like, we can't accept any documents that's been manipulated, because once it's been crossed through or blacked out, I mean,
it's no longer valid.
It's no longer a valid document, right? Yeah. So we need that. So I know people are like, oh my God, I don't want you to know this or see this information.
I already got your social.
When you're applying for a house, we already have your social security number. So there's really, outside of that, there's nothing else that's, you know what I mean, more sensitive really than your social security number. So it's like, you know, and we're not paying attention to that stuff. Like, that's not stuff that's like even we're worried about, but you can't manipulate a document. You can't write through stuff, because that document is you know, we can't use it anymore.
Yeah.
So I just want to make sure I put that out there, because I actually had a situation just yesterday. You know, I had a gentleman send me a document. He had like black marks throughout it all. I'm like, man, I can't use this, man. You know, he just kind of gave me the sob story of why he did it and why he didn't want us to see, you know, stuff.
I had someone do that with she was a government worker, and she blinked out everything, and I sometimes you have to put people in the same mindset of you, right? So my rebuttal was like, well, how do I know whose document this is? And she looked at it and she was like, you know what? You're right. Like, I can't tell whose document it is if you're crossing out everything. We are. It's just funny what some people do. But also, do not co-sign for anybody. Please don't co-sign for your cousin's car. Please do not co-sign for your mother's car. If you're looking to buy a home, that is considered your debt too. So try not to do it. Secure your house first.
Yes.
Then you buy a car, or you know, get your furniture or whatever. But definitely secure your house. Make sure your debt to income ratios are low.
Yes.
That's our list of do nots. We definitely let everyone know that we help. Like, this is what you do not do.
Correct.
And it's also in our documentation. So once you get under contract with us as a lender, we have a list of do nots that are included in the documentation.
Yes.
And you actually sign off that you're not going to do that stuff.
Please read that stuff.
Yeah.
I know it's a lot of documents, like they're called initial disclosures. So once you get under contract, we can now put the property address on there. We now can confirm the loan program, the loan type that you're doing. We can confirm the price and all that good stuff. And so there's some initial disclosure that's sent out to you in a loan package.
In there.
Yeah, it's good information. I know it's a lot of papers, but if you read through it, probably take you maybe 15, 20 minutes out of your time to actually read through it all. You'll know what is coming, and then you also will know what to do and what not to do.
Correct. So especially when you're buying the biggest investment of your house, you want to definitely, of your life.
Yeah.
You want to definitely know exactly what you're signing, and you want to know what not to do.
Correct.
You know, because what ends up happening is when you do these things, and then somehow we're no longer able to close, you've signed that you wasn't going to do the things that you did.
Correct. Exactly.
So, you know, you just want to make sure that you're doing your due diligence just as much as us, because we can tell you not to do something, but everybody's grown in the transaction, so you can pretty much kind of do whatever you want to do, but it comes with a consequence.
Absolutely.
Yeah. All right. So now, so far, our timeline is we're under contract. Everything has been resubmitted to underwriting so they can go through your file with a fine-tooth comb, take a look at your bank statements, take a look at your income, even take a look at the sales contract to make sure that everything was completed correctly. They have given this list of items that we need to work on in order to get you to closing. Now we have your insurance. You've already, spoke to your insurance agent. We have your title work that came from your title company, so we know what the fees are to get this property transferred from the seller's name into your name. And now we're getting ready to basically put the package together to give it back to underwriting and say, you know what, that list you gave us is now complete. We have fulfilled every need that you wanted on this list, and now we need you to clear it. We need you to say, okay, yep, you are cleared to close on the day that you were scheduled to close. So now this goes into underwriting. Of course, during this time frame, you have not opened up new bank accounts. You have not made your deposits. You have followed every rule that there is, and the underwriter has finally given you the clear to close.
Yeah.
Right? Yeah. So once that happens, then a lot of your fees are going to be balanced. So basically, your title company is going to work with what's called our closer, and we're going to make sure that our numbers match, and we're going to make sure that there was nothing done that the other party wasn't aware of.
Correct.
Right? And once we get to that point, they'll give us that final figure. So a lot of people always say, well, once they're in the contract, we give them their estimated cash to close. They're like, okay, this is the number that I have to come to closing with. No, that's not correct. This is an estimate.
Correct.
So
keyword estimate.
Yes.
Loan estimate.
Estimate, right? So once we get to clear close and we balance those figures, a few days before closing, we're going to give you that final number. And usually it's going to either come from the title company or it's going to come from your loan officer. And then at that point, you have to go to the bank and get a cashier's check, not a personal check. Or you can do what's called a wire transfer. It's an electronic transfer that is initiated from your bank. It is not like an online bill pay. It's actually called a wire transfer. And we give instructions on how to do that. So you'll know that you're doing a wire transfer because there's instructions on how to complete one.
Make sure if you do a wire, first check with the real estate office that you're doing the closing with that they accept them.
Yeah.
Some of them don't anymore just because there's a lot of wire fraud.
Mm-hmm.
A lot of times people hack into that and they can actually intercept the money from going to the place that you initially wanted for it to go to.
Mm-hmm.
So when you do a wire, just make sure that all the information is 100% accurate. And typically when you're on the phone or if you're doing it online or however you go about it, most time you have to do it over the phone with the representative. Make sure that they typically double and triple check with you, but make sure you double and triple check your information because, a lot of times if the money's sent to somewhere and it's not the destination you want to go, it can be very difficult getting back. In some cases, you may not get the money back. So they'll even read a disclosure to you over the phone and tell you a disclaimer.
So you have those two options. I mean, either one of them. You
can't bring cash to closing. Can't bring cash.
Cannot bring cash. Cannot bring a personal check.
Yeah.
So you'll bring your check to closing, and then at that point, you're going to sit down with that attorney or that title company, and you are going to sign your documents. And the day that you sign, you get your keys, and you can begin to buy your furniture, buy your car. Yep. You can move in the property. You know.
Yeah, you do anything you want to. I don't care what you buy. Just wait till you close.
Yep. So once everything is done. At that point, you are cleared to close. You have closed. You have signed your documents, and now you are all set. And then usually, at least with most lenders, I can't speak for all lenders, but the month that you close, if it's after the 5th of the month, your typical mortgage payment won't be due until it skips a month. So, for example, we're in January.
Right
yep, we're in January. Today is the 13th. So if you close
Friday
today,
the 13th too.
right?
Yeah.
If you close today, your first payment won't be due until March 1st.
Correct.
And that's in most cases.
Yep.
Now we can manipulate it to where you start making payments on February 1st, but we try to make sure that you get that little bit of a grace period. Now, people say, well, is that free money? Like, is it something that's like benefiting? No, it doesn't. It doesn't. You pay it at closing, or you pay it
when the payments due.
when the payments due. So it's still something that you're paying. It's just the timing of when it's paid.
It's called prepaid interest. So
correct.
So like Sophia said, is when you close, you're always going to skip a month. So sometimes people say, hey, it's better to close earlier in a month, and like we're in January, we're pretty early in January, so it's better to close.
We're mid-January.
Oh, mid-January. Okay. Yeah, that's true. 13th. You're right. So some people will say, hey, it's better to close earlier in the month versus later in the month. And I guess it really just depends on how you look at it, right? Mm-hmm. Because if you close earlier in the month, you do have that longer period between when you close to when that first payment's due. Mm-hmm. But at closing, they're going to collect enough prepaid interest that's going to carry you from when you close until when your first payment's due. Mm-hmm. So there's more cost that are being collected at closing. Now, if you were to close at the end of the month, so let's say, we're using January for example because we're in January. If you close at the end of January, your first payment's still going to be due March, but there's going to be less prepaid interest that's collected because, the time frame from when you close to when that first payment due is less than it is if you were to close at the beginning of the month. So it kind of washes itself out. It really just depends on like, hey, do I want to pay for it here at closing and have a little bit longer time frame before that first payment hits, or do I want to pay a little bit less cost at closing and then have the payment start, that following, not that month, but still the month after that. So,
yeah. All right. So hopefully that was great information. Now you officially know what happens once you're under contract and you have a idea of what that looks like.
Yeah.
But now it's time for us to reveal the exercise your knowledge answer.
Okay.
So earlier in the segment, we asked the question. You know, we like to use that $300,000 price range.
Oh yeah.
So we asked the question: if you purchase a property, if you get pre-approved for a property at $300,000, and you go out, you look for homes, and the property that you fall in love with is $275,000, what happens to the remaining $25,000? It's a mystery.
All right, you want to do a drum roll?
Drum roll.
All right, the answer is nothing.
You don't get the money.
You don't get it. You don't get it. So, yeah, that's a question that we get a lot, and I understand the logic behind it a little bit. You know, as far kind of right. I'm trying to give people the benefit of the doubt, right, as far as their thinking goes. But you know, you're pre-approved, like Sophia said, for $300,000. And then so if you were to choose to buy a home that's less than that, you're still wanting to have access to the difference. But that's not how it works. A mortgage is used as collateral. That's why it's called a mortgage, right? Because we send the loan to the lender, or excuse me, to the real estate attorney or to the seller, and then they place a lien against that property, right? So that's why it's not a situation where, you know, we can give you, you know, the difference. Because we can only give you what you're actually paying for that particular home. So when we pre-approve you at the beginning, we're just telling you, hey, you know, based on, you know, your debt to income ratio, based on your credit, based on all the different factors that it takes to pre-approve you, this is the max that monthly you can put out that we can qualify you for.
Correct.
So we're not able to just cut you a check for the difference. It's not how it works.
Now there are special programs out there.
Correct.
Where you can potentially do something like that. So you buy a house and, you know, you want to fix it up.
Yeah, renovations, yeah.
And you do what's called a renovation type of loan.
Yeah.
Those programs do have separate qualifications.
Correct. They're a lot stricter than your normal. Exactly. So typically if you qualify for $300,000 on a purchase, you know, let's just say a regular purchase, then on that program, it's going to be less than that. I mean, in most cases, it's not like what's what. It's not like you're pre-approved for the same amount. Like the debt to income and credit requirement, all that stuff is a lot more stringent. Yeah.
So for your normal programs, like your FHA, your conventional VA, you definitely will not get the difference back in cash. I mean, you think about it. If you buy a house for $275,000 and the value is $275,000, why would you even want to finance $300,000? Your loan would be upside down. Correct. You would actually owe more than what your property's worth. So when it comes time for you to buy or for you to sell the property, now you're not going to even make a profit because you have to pay back the lender more than what it's even worth.
Correct. And even at closing, I mean, the money never actually touches your hands. That's another thing I want to make sure folks understand is like, so that situation wouldn't even really be realistic anyway, because, you know, when you're buying a home, like I mentioned to you, you know, the lender is giving the money to the real estate attorney who then disperses funds to all the different parties involved in the transaction. Yeah. So you're not actually touching the money. They're just placing a lien for the money against the property, and then you close.
Correct. Yeah. Correct. So, no, nothing. You get SNATA.
You get a home. It's not extra money.
Well, it's not extra money. Yeah. Sorry. Yeah. And there are programs for that. You just have to qualify for them.
Correct.
And the qualification process is a little different.
Correct.
All right. So what we got upcoming?
Yeah. So upcoming this weekend, my son, as I mentioned earlier, he has his first basketball game, so I'm eager to check that out. That should be fun. Kind of nervous. 2 reasons. I don't know. Like I said, I think he may just stand there and kind of look around. Like it might be a lot going on for him because he's really never played. He's never played organized basketball before. And then also my daughter. I'm kind of nervous for her because her favorite words are "me too, me too, me too." So I know obviously we're all going to go and support my son for his first basketball game, and I know she's going to see him on the court, so she's going to want to run on the court and like run around with him or help him if somebody like bumps him or something like that. She's with the, you know what, with the shits, as they say, you know what I'm saying. So she's always going to have her brother's back. So I'm just kind of nervous to see how that whole situation plays out, but I'm definitely excited for it. These are like those memories that I'll hold on forever. You know, his first basketball game, so I'm really looking forward to that. Also, We're doing like a staycation this weekend. We typically do something like this maybe once or twice a year where we just unfortunately, not unfortunately, but we typically have the kids with us as well. But we're getting a hotel down at the ocean front, one of our favorite hotels. We like to stay here in Virginia Beach, and we're just staying there for the weekend.
Okay, that sounds nice.
Yeah, so we're just gonna kind of change the scenery up a little bit from our house. Not have to cook and clean, just kind of order food, relax, play with the kids. It's supposed to be really cold this weekend, but we're still going to try to do some outside stuff with them a little bit. Maybe walk the boardwalk and play around a little bit with the kids. But after my son's basketball game, that's when we're going to go there. So I'm looking forward to that. And also the NFL playoffs start this weekend, so I'll be tuned in to that. I know Brooke's not going to want to hear that, but I'll be definitely watching that. My boys play on Saturday too, I think like 4:30. So during this whole staycation, I'll be in front of a TV somewhere watching that as well, and hoping they can finally make it to the Super Bowl again here and get a Super Bowl championship. So.
Okay.
What you got going on, Sophia?
So today is my husband's birthday, so we may be doing dinner tonight.
Happy birthday. Okay.
And then I do have to do my middle child's hair, so I'll be braiding.
Okay.
So yeah, I'll be doing that, and then I think my repairs for my duplex will be finished today, so I'll actually get a chance to put that on the market, get a renter in here. I'm so excited.
That's exciting.
Yes. And then I'm a whole not literally a soccer mom, but I'm always doing some type of sport. But yeah, we have games this Sunday. So we have 2 volleyball at the Virginia Beach, what is it called? Field House.
Field House, yeah.
So I'll be there with bells on. Maybe I'll get some more
fries.
Eat
them with your fingers this time, though.
No.
You gotta eat them with your fingers. You ain't getting the real experience unless you eat them with your fingers, man.
No, not in public like that. No, because then you know what's gonna happen, right?
What?
Come Tuesday, I'll be like,
oh, you coughing and
sick.
stuff? Yeah.
I got COVID.
Yeah.
No, we're gonna use that fork, and then they fork's pretty cool because they got like the fork that's like covered, and you actually got to like take the plastic off. I was excited when I saw that. I was like, oh man. Usually, you go to a spot and they just put a bunch of them in there.
Yeah, like in a container or something. Yeah.
Right. So it was actually all neat and tidy. I was like, oh man, I'm gonna use this fork and put bells on. But yeah, so that's what when I'm doing this evening. I haven't picked out like a restaurant, but definitely excited for the weekend. I'm ready to chill, pretty much. I mean, of course, if my phone rings, I'm going to work, but I'm not going out looking for anything this weekend.
There we go. I understand. I hear you.
All right. So, at the end of every segment, we love to give you guys a quote of the day. We want to keep you motivated and keep you going for the weekend and hopefully for the remaining of all next week until you see us again. So, today's quote of the day. You want to do the honors?
You can do it. Go ahead and knock it out.
All right. So, the quote of the day is the happiness of your life depends on the quality of your thoughts. Ooh, I tripped through that one, boy.
Yeah.
Let me hold on. Let's reverse.
Yeah, I had the little rewind.
The happiness of your life depends upon the quality of your thoughts.
Yeah, that's powerful right there, man.
It is
powerful. Because I'm big on whatever you think, like what are your thoughts are what's going to happen. Like I'm very mindset, very optimistic in every situation, even when the odds aren't in your favor. And so if you're just manifesting happy thoughts, positive thoughts, then you're going to have a positive outlook on life, and there's going to be a lot of positive things that happen to you.
That's true.
But if you're always looking at situations like, well, dang, and well, if this isn't going to work, it's not. It's not. So just, your positivity. I mean, some folks, honestly, it's crazy. I've even had some folks tell me I'm too positive. Like, I don't know. I don't even know how there's such a thing to be too positive. Like, but it's some people who just, they always feel like things happen to them, right? They're always, the universe is just out to get them and things happen to them and whatever. And I don't believe that. You know what I'm saying? So, but, I'm always positive. I'm always like, hey, let's do this, let's do that. Let's try to figure this out. Let's find a solution for it. Let's try to work through it. And some folks who expect bad things to happen to them and that's all they think about is bad stuff, that makes them uncomfortable, which, is crazy to me, but I mean, that's just the reality of where we are. So,
Yeah, make sure you have them positive thoughts, man.
Yes, definitely have those positive thoughts.
Yeah.
All right, so that's all the time that we have for you today. Please follow me on Facebook at SKB_mortgage and on Instagram at SKB_mortgage.
Yeah, and follow me on Instagram. I'm Bryan_Royster on Instagram, and then on Facebook just Bryan Royster. So I changed it up. I think last episode I mentioned it. So yeah, just check for me.
All right, guys. Well, thank you for listening to our podcast, and we will see you next week.
See you next week.